My name is Davido Paradzai. I am one of the lecturers in the auditing department at CAA. In this video lecture, we are going to cover corporate governance. The videos are split into three, and this video, I am going to cover part 1. Make sure you watch all 3 videos in their correct order. I'm going to introduce to you King 4. You could be asking yourself, what is corporate governance? Why the need for corporate governance? Corporate governance is the system of rules, practices, and processes by which an entity is directed and controlled. What gave rise to corporate governance? In the past, as time went by, companies started to grow. There was need to split ownership and control, whereby the owners of the company were not necessarily the managers of the company. Managing the company was left to the board of directors. Therefore, there was need for corporate governance for the smooth running of an entity. Corporate governance is of paramount importance to a company. The same way that a business plan is important for a company is the same way that corporate governance is important for the effective running of a company. It prevents corporate scandals, fraud, civil and criminal liability of the company, and it boosts investor confidence. You will find if investors are aware that a company exercises good corporate governance, they'll be attracted to that company and are bound to invest in that company. It also facilitates effective entrepreneurial and prudent management that can deliver a long-term success of the company. So it is essential that a company exercises good corporate governance as found in King 4. What are the objectives of King 4? It attempts to promote corporate governance as integral to running an organization, that is by the board of directors, the governing body, and delivering governance outcomes such as ethical culture, good performance, effective control, and legitimacy. Those underpinning principles result in good corporate governance, in effective leadership for running an entity. King 4 attempts to broaden the acceptance and application of the King 4 report by making it accessible and fit for implementation across a variety of sectors and organizational types. That is, it is scalable and can be used by all entities irrespective of the size and form of incorporation. The objectives continued. King 4 attempts to reinforce corporate governance as a holistic and integrated set of arrangements to be understood and implemented in an integrated manner by an entity. It encourages transparent and meaningful reporting to stakeholders. Communication with stakeholders is therefore transparent. It presents corporate governance as concerned with not only structure and process, but also with an ethical consciousness and conduct in the way in which a business is managed. So for exam purposes or for test purposes, you will have to carry a hard copy of your King 4 as found in the handbooks. When you open the King 4, it is structured in 7 parts that I will outline. Part 1 is a glossary of terms. We will go in detail with these parts. Part 2 comprises fundamental concepts of King 4. Part 3, King 4 application and disclosure. Part 4, King 4 on a page, just a summary of King 4. Then part 5, King 4 Code on Corporate Governance. Now this one outlines the King 4 recommended practices in detail. make sure you go through part 5 and you highlight important recommendations so that you won't have problems in the exam. Part 6 relates to sector supplements, and part 7 relates to content development process and the King Committee. So now in detail, part 1, just a glossary of terms. You may, in a relaxed mode, go through the glossary of terms so that you know and understand the terms to give context to the reading of King 4 report. When you then read the King 4, you will want to have gone through the glossary of terms so that if there are any abbreviations, you will know what the abbreviations stand for and you understand the King 4. What are the fundamental concepts underpinning King 4? This is found and outlined in part 2 of the code. There is a definition of corporate governance and outcomes, which are an ethical culture, good performance, effective control, and legitimacy. The moment the governing body, the board of directors, possess these. Part 2 of the code defines corporate governance and its outcomes. When exercised, corporate governance will result in an ethical culture, good performance, effective control, and legitimacy for the entity. Ethical and effective leadership should complement and reinforce each other. Therefore, those board of directors, the governing body, should have ethical leadership, which is exemplified by integrity, competence, responsibility, accountability, fairness, and transparency. The moment the governing body possesses these principles, it is likely that the entity will operate effectively and will be run effectively, therefore resulting in good corporate governance. So what is the governing body's primary governance role and responsibility? The governing body or the board of directors are there to steer and set direction with regards to the organization's strategy and the way in which specific governance areas are to be approached, addressed, and conducted. They run the entity. They are at the top. They are there to approve policy and planning, that is, to give effect to the strategy and the set direction. They oversee and monitor implementation and execution by management. They ensure accountability for organizational performance by means of, among others, reporting and disclosure. It is critical that these people exercise good corporate governance so that the entity will be managed smoothly. What are the underpinning philosophies of King 4? You will find there is need for sustainable development. Today's generation's needs should not affect the needs of generations that are going to come. So, King 4 emphasizes on integrated thinking, whereby an entity is supposed to be seen as an integral part of society. They operate in the society, they are supposed to give back to the society. Stakeholder inclusivity. The entity derives value from operations with stakeholders. They are also supposed to give value to the same stakeholders. Corporate citizenship. An entity must attempt to obtain a corporate status within the society that it operates, therefore resulting in integrated reporting. So King 4 encourages integrated reporting, whereby the entity does not only benefit itself but benefits the society in which it operates. Highlights of the King 4 Code. The King 4 Code emphasizes on integrated reporting, as mentioned earlier on, a balance of composition of governing bodies and independence, delegation to management, delegation to committees, corporate governance services to the governing body, performance evaluations of the governing body, social and ethics committee, risk and opportunity. These highlights are important for test and exam purposes so that when you're examined on risk and opportunity, you know where to turn to within the King 4 so that you get the correct recommendations and the correct principles from King 4. The other highlights are technology and information, compliance with laws and regulation, remuneration. You may know that there are issues, there are scandals of huge packages given to managers within an entity, given to owners within an entity. The remuneration packages, the recommended principles are outlined in King 4. Assurance and internal audit, how an entity is supposed to be audited, those required to be audited, and how the internal audit comes in. Auditor and audit requirements, tax, shareholder activism, and dispute resolution. So, part 3 of the code relates to application and disclosure. What is the legal status of King 4? King 4 is not law, it is not an act. It is a set of voluntary principles that an entity can apply and explain their application of the King 4 Code to attain corporate governance. However, a particular industry may require entities operating in that industry to comply with King 4, but it is not law and it is applied on a voluntary basis to achieve smooth running of an entity. The scope and application of King 4, as mentioned earlier on, it attempts to be used by all entities. It is scalable irrespective of the form of incorporation of a particular entity and its size. They can use King 4. Where to make disclosures? King 4 is on an apply and explain basis, whereby they apply the King 4 principles and they explain, they disclose the way in which they have applied King 4 within their entity. So the roadmap to disclosure of application, when an entity discloses the application of King 4 within their integrated report, they will reference all principles in the code, explain narrative form of matters that King 4 recommends for specific disclosure. They consider recommended practices and, if applicable, mention the alternative practices, and they also have to assess their disclosure in compliance with King 4. You may have studied King 3. You may have known about King 3. It has been replaced by King 4, which you must be well versed with. It is highly examinable, and I encourage you to go through your King 4 and highlight the recommended practices so that you will not have problems in a test or exam scenario. King 4 is effective, King 4 was effective from 1 April 2017, so all your tests and exams will be on King 4. This brings us to the end of part 1 video lecture on corporate governance. I'll see you in part 2. Make sure you all watch all 3 videos on corporate governance. Thank you.